Financing on a note, especially a one note or a handful of notes, it makes it, it's just non-existent. So, but when it's held in a trust, it becomes very easy to finance. So there's no requirement to finance. You're welcome to pay all cash, but if you need financing, we can finance up to 75% of any note transacted on the preREO platform. I should say 75% of the acquisition price of any note sold on the preREO platform. We're going to sell 100 loans to 100 different investors. That means 100 different know your customer checks, 100 different contracts, 100 different closings. That's going to require extra resources on our side, more time in our legal department. It's just not worth it. So that was the problem that we were trying to find a solution for, and we came up with a solution. What we came up with is we set up a trust, preREO trust, and the trustee is U.S. Bank. All the investors who buy a loan or loans on preREO get participation agreements in the particular asset or assets that are held in that trust. And so now we go to institutions and say, hey, you're going to be selling 100 loans to 100 different investors, but there's only one buyer, and it's the trust with U.S. Bank as a trustee. So that makes it for a very easy know your customer check. It makes it for one contract, and it looks by all means, by all appearances, it's an institution. And so that was the solution. Seller said, sure, we'll do that. And then the investors who purchase the loans and they get a participation interest, it's been great for them too, because roughly half the states in the union require that in order to hold or enforce a mortgage in their state, you need a license, and that license is not just a one-time, hey, pay a fee and you're done. You have to renew the license each year. You have to do continuing education each year. And if you're buying in 5-10 states, all of a sudden you need licenses in 5 or 10 states. And if you're buying tons of mortgages, that makes sense. But if you're buying a modest number, it doesn't make so much sense. But the great news is, all these states have an exemption that if the mortgage is held in a trust with a national bank trustee, then you're exempt from the licensing requirement. So another big solution for the borrowers. Plus, when it's in a trust, we can finance it. Financing on a note, especially a one note or a handful of notes, it makes it, it's just non-existent. So, but when it's held in a trust, it becomes very easy to finance. So there's no requirement to finance. You're welcome to pay all cash, but if you need financing, we can finance up to 75% of any note transacted on the preREO platform. I should say 75% of the acquisition price of any note sold on the preREO platform. And for that matter, if you find one off the preREO platform and you need financing, we can also help there. That solution, the trust has been the real missing ingredient to having a solution for institutions to sell distressed assets, in this case mortgages, directly to investors on a one-off or small pool basis. So we're excited by that. And to be clear, those participation agreements with the investors provide that the investor gets to make all the decisions, they get delegated management authority, and they also get all the economic benefits. So it's simply a compliant holding vehicle in the middle between the institutions and the investors. So we're excited. We think it's a great solution and one that really helps power this to make it work.